So guys, PULM, I lured the stock at 312. Now if we look at that area, 312 is right about right here. Personally, I got in at 317. I'm not getting in earlier than my alerts. If anything, I usually get in late because I alert all you guys. I usually send out an SMS alert and then I usually hop in myself. So sometimes, I'm in a little bit late, but at the same time, I'm here with you as a trader trying to make money in this market. So I want to break down each of these steps and figure out, why did I alert this at 312? Why did I alert this at 360? Why did I alert this at 375? What is all the reasoning behind this? Where's my credibility? And I will show you guys this right now. First things first, guys, let's figure out PULM. Why did the stock break down, or why did the stock break out? Excuse me. What was the credibility behind it? What made the stock really go boom? Simple as that if you want to keep it. What we have right here. Well, first things first, guys, PULM, if you just type in PULM on Yahoo Finance, we did come out with a nice press release about 1 hour ago. And this is when things really started getting hot and spicy, guys, that we have PULM receives European patent for its inhaled drug delivery technology. So PULM receives European patent for its inhaled drug delivery technology. That is going to be bringing in a lot of hype, a lot of press releases. Why is that, guys? Again, what do we have? Keywords to look for in hot press releases. Keywords to look for in hot press releases, guys. You guys can look at this in the notepad, bottom left-hand corner of your chat room. I can't drag over the notepad because it's part of the chat room. So I always just put them on my Word document right here. And what do we have right here, guys? Well, here's number 2, receives. Received is a key word. Why is receives a key word? Receives mean the stock or the company is gaining something. It's, obtaining a new asset. It's going to be growing. So it's receiving something. On top of that, we're receiving a patent. Whenever you have a patent for something, obviously that is a very good thing. A very good thing. No one else can, take that from you. So it's receiving a patent. So it's basically gaining gaining a patent, which is a very good thing to see. So now we have, hype. Now we have why the stock is moving. It's simple as that. Now, how did we find PULM though? PULM, what else is so great about this stock? And as we're talking, guys, right now we actually still have PULM still alive and kicking. So make sure you guys are focused on this play. If it breaks through 390, we could have another breakout on our hands, as we do have a little bit of this wedge forming on this play, looking back in the 3-minute chart right now. Again, PULM is going to be the hottest stock probably throughout the rest of the day. We did just have a pretty strong pullback, but we might have a little bit of a wedge forming right here, as the stock is going to be getting squeezed tighter and tighter and tighter until we maybe get that, big time breakout for, another big time leg up. So while you guys are watching, excuse me, for that possible 390 break, guys, let's talk about how I found this play, why I got in at the areas I did. Now, again, it opened up at 9:30. Not too much action on minute 1. Minute 2, not too much action. Now we start moving on up. Now we're breaking $3, guys. Now $3 is a very, very tough resistance line to break. Now this is a whole number. Now when we break $3, guys, what does that mean? That means we're going to have buying volume come in, because as you guys know, this is a whole number. A whole number is hold up as natural resistance. $1, $1.50, $2, $2.50. These are whole numbers, guys, or every 50-cent increments, which are going to hold up as very strong resistance lines. When we break through resistance, that's where we get nice big rips. That's where we get nice big pops. That's where we take on off. So we could see we broke $3, and look what happened. We got a big volume push to push the stock, straight on up. Now, even though I saw this moving on up, guys, why didn't I hop in right here at the break of $3? And I know what I'm talking right here. I'm still watching PULM. We have a high of the day at 390. We might have to actually put our lesson on pause if this does break 390. But I do want to continue to chug along with this lesson. Now, again, if we go to stockcharts.com right here, I'm not going to cover up the screeners. I just want you guys to really see this. If I type in PULM on this chart, what do we see? This blue line right here, guys, is the 50-day moving average. This is the 50-day moving average, which holds up a lot of plays. As you guys can see, if you guys look back here, 50-day moving average holds it up. 50-day moving average holds it up. We break the 50-day moving average. Look what happened. We got a very nice spike. We got a very nice run. PULM. Stock starts coming back on down. Even last time we broke the 50-day moving average, went from $3 all the way up to $3.76. We're back underneath this. Why'd I, not buy until the break of 310? Well, 308's the 50-day moving average. So breaking that 308, 310 mark confirmed that, hey, you know what? We have a lot of room to move up. Nothing's stopping the stock now that it's above that area. It's not like the 200-day moving average. You could see it came up to the 200-day moving average, got stuffed right there. PULM, broke this moving average right here at $3 or 308, and that's where we continue to move on up. That's where we continue to get that nice big pop. So that's where our first alert came into play. Not only are we breaking a $3 natural resistance mark, we're breaking 310, which is the 50-day moving average, or 308. So I said, hey, you know what, 310, I'm going to wait until we kind of get into the double digits. And PULM, our first alert was at 312 right there for that next leg on up, that next rip, that next climb. And that's where I was in at. That's where I got in at with 4,000 shares. And that was right here at 312. Now we did spike on up towards around 330. I got out in this area. Just because I like to lock in my profit. Again, when I have 4,000 shares, I don't care who you are. When you have 4,000 shares, you want to make sure you lock that in. No one wants to, be up. No one wants to get in at 312 and then all of a sudden it goes down to like $3. The next thing you know, you're down a few $100, almost down $1,000. So again, I don't need to hold 70 cents to make profit. If I hold that long, I'll probably be making like $2,000 or anywhere along those lines. But at the same time, if I get a nice, 20-cent rip, 15-cent rip, I'm still making, $400, $500. So, I got nothing to really, complain about whatsoever at all. So we did get that 325, again, 25-cent increments, natural resistance. Stock comes back on down. We get a nice big rip on up. We get a nice big climb on all the way on up towards around that 360 mark. This is just from hype. This is just from volume. We got in nice and early at 312. It ripped all the way up towards around 325. Stock continued to go up on hot volume. Stock continued to go up on hot momentum. Stock continued to go up on all the traders that were flooding in on it. Now, where did we run up to? 375. Why did we run up to 375? Natural resistance, guys. Again, every 50 cents is the tough resistance, but every 25 cents will hold up as some resistance. So $1, $1.25, $1.50, $1.75, $2, $2.25, $2.50. Now, these are going to be every area where the stock's going to get held up a little bit or some sort. So what did we have going on here, guys? Basically, we had 375 resistance. So we can't do anything until we break 375. What you can do is put the stock inside a channel, and you guys can say to yourself, hey, you know what? We have 375 resistance. We have around this 345 support. Every time the stock goes up to 375, it gets stuffed. Every time it comes down to 345, we have support where we bounce back on up. So if you wanted to, you could do buy at 345, sell at 375. Buy at 345, sell at 375. Buy at 345, sell at 375. You could keep doing that over and over and over again just to make some nice quick money. You definitely could be doing that over and over and over again. But what did I see? Where did I put my next alert? Next alert, guys, after that 312 buy alert, we put it up right here at 361. Now, again, why did we put it right here, guys? Let me actually fix this for you. Bring out the arrow right here at around this 361 mark. Why did we do it right there? And that's because this pattern is a higher low pattern, guys. This is a higher low pattern. So what we have here, higher lows indicate breakouts. And if you guys want to look at it, you guys can basically see there's a nice little U shape here. As you guys can see right here, we go straight up, straight down, straight up, straight down, straight up, straight down. This is a gradual climb. Gradual climbs to higher lows indicate breakouts. You can also, if you have your top resistance right here, you can also see the stock basically rides up these higher lows right here. When the stock rides up higher lows, it's the stock being squeezed. Basically, it's the stock getting squeezed tighter and tighter and tighter. So all this volume down here is getting squeezed into a tighter and tighter and tighter area until we get boom, and we get all this volume coming in at once, which brings it up to its next level. So, we need volume to break resistance. So when we see the volume move on in, that's where we get our break, that's where we get our run. Obviously, right here, we got some of our biggest volume at the $3 break, at the 325 break. Then the stock, of course, was inside this channel. We can't really do anything inside this channel. Maybe just do some dip buying at 350 if you wanted to. But then we get these higher low patterns. Higher lows start forming. These gradual climbs start forming until we come back on up and break. There's a big difference between going straight up, straight down, straight up, straight down, and forming this nice gradual climb of higher lows. This is going to tell us that this stock is going to be breaking on out. So that's why we had the 361 break, because we're like, hey, if you want to get in a little bit early, a little bit risky, but at the same time, it's a big difference between right here and right here. You know, it's a lot easier to tell the stock's going to break out here. So then from there, guys, we had the 375 or 376 buy alert, because that would be breaking this mark, and that's when we went all the way up to 390 for, you know, another 14 cents. Let's say you have 1,000 shares, which again, all you need is about an account with a 3,760 bucks, which I'm sure probably like 80% of you guys have accounts over, let's say 4,000 bucks or $4,000 or so. So again, all you guys could probably afford that. 1,000 shares runs 14 bucks. You make 140 bucks right there. You know, simple as that on a very simple play. If you bought in on 312 or 317, whatever area that was, and you held from, you know, if you held from $3 all the way up towards 375, 1,000 shares cost you $3,000 to invest in, but you're making $750 on that, you know, return. So again, you know, it's all about finding these patterns and being smart. If we look over at the daily chart, guys, if we look at over at the daily chart, what is this chart pattern right here, guys? And you guys should all know this. You guys should be screaming at the top of your lungs on your computer screen right now, saying mid-candle breakout pattern, Dek. And that's exactly it, guys. Mid-candle breakout pattern right here. We got a nice big spike on up. The next day, the stock goes down to mid-candle of the spike, and that's where we get our next leg. You know, that's where we get our next leg on up. We show you guys these examples a lot. We even have a little bit of a mid-candle breakout pattern right here. Imagine if you combine this day, and this day to kind of one big green candle. Imagine buying these combining these three candles as one big green candle, and then we have, you know, these two red candles comes right back down to the middle of that mid candle, and that's when we get our spike. Mid candle breakout pattern, guys. So we get our nice big rip. Next day comes back down to mid candle of the spike. After that, we get our nice big climb. Again, these are simple patterns. Make sure you guys go over to the video library, and you guys can learn all about the mid candle breakout pattern. You guys, it's actually one of our first lessons. We have it is called favorite breakout patterns, wherever it is, if I might have skipped it already. And I definitely did. It's called favorite breakout patterns, and you guys can go ahead and check that out. That's one that, you know, a lot of people enjoy. Here it is, 5 favorite breakout patterns. 5 breakout patterns. So that's about a 30-minute lesson. We teach you guys can see bull flags right there, but we will teach you guys mid-candle breakout patterns in that lesson. So make sure you guys go ahead and check it out. So, you know, that is something that you guys can look forward to. But that is why PULM, you know, got that nice pop today, guys. Again, breaking the stock on down, breaking the stock down top to finish. What's going on here? Why are we looking at this play? Well, PULM, first things first, on the daily chart, we have a mid-candle breakout pattern. Boom. We already have credibility. On top of that, PULM came out with a press release, receives European patent for its inhaled drug delivery technology. Boom. We have another, you know, form of credibility. We have another form of hype. PULM on top of that, 7 million in float. Lower the float, the better, guys. When we have 1 million, 1.6 million, these can really rip. Anything in blue. So we have 7 million right here. That's still a rather low float. Boom. Something else that can make it a rip. What else do we have? Well, when you look at PULM, what's the first thing you notice? I doubt it's you notice these little stocks over here. You see this monster mountain right here of a, you know, a profit. Basically, this thing absolutely ripping. Now, when a PULM starts ripping, traders get excited because they want them to turn into this. You know, traders want this stock to, you know, turn into this play. Boom. You know, we got another level of credibility. On top of that, though, guys, PULM, we look at the chart. What are we seeing? We're seeing the break of 308. You know, break of 308, we start ripping all the way up towards around 385. Boom, because again, we're breaking the 50-day moving average. I could keep saying boom all day, but I just feel like I'd start annoying you, so I'm going to stop doing that. But at the same time, you know, we could see that we break 50-day moving average. That is where hype starts, you know, coming on in. So again, we break the 50-day moving average. Now we are bullish. And that's where, you know, hype really just takes over. Now, after all that stuff, guys, that is where we got to start breaking it down into the 1-minute chart. You know, we break the 50-day moving average, buy alert. We run up to 325, a little consolidation at 325, break of the high of the day. We get a nice run up, another buy alert at that break of the high of the day at 330. Now, again, we could put the stock inside a channel. We could be buying at 345, sell, 345, sell, 345, sell. Now, if you guys don't like any of that, where did we put another buy alert? Was right at this area of a higher low pattern, building higher lows, higher low, higher low, higher low, higher low. Stocks getting squeezed in this triangle. So stocks being squeezed inside this triangle, volume is getting squeezed. We get a pop. Nice pop on up, break of that from 361 to 375. There's a nice play at resistance if you want to keep holding. 375 break all the way up to 390. Now again, we can carry out this trend line even farther, and look what happens when the trend line breaks. Trend line breaks, the stock starts heading on down because that's the trend line. Again, when anything on the bullish side of the trend line, you are good to go. You are happy. You're enjoying yourself. The moment it crosses over, guys, that's when things are going to start getting awfully red. I use that childish analogy all the time. But over here, guys, on top, this is the shallow water. You're a little seal flapping around doing what seals do, having fun, and enjoying your day. And all of a sudden, you cross over into the deep water. That's when sharks are going to come on up, and that's when things are going to start getting awfully red. Just from putting on this trend line, we're able to tell this, guys. Just from this little trend line right here, I'm able to tell when I'm a happy seal and when things are going to start getting awfully red. This is the shallow water. This is the deep water. This is the bullish side. This is the bearish side. Make sure if you're going long on a stock, you're always on the bullish side. Make sure if you're going short on a stock, the stock is on the bearish side. It's very easy. You break down these stocks into simple indicators. You guys will be able to predict the market. No problem whatsoever.